Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your co-host, Tyler Coates, joined today by the lovely Daisy Coleman. How are you doing yourself?
Hey Tyler, I'm doing very well, thank you. How are you?
I'm doing great. I'm really
Yeah.
looking forward to today's show. We are going to have Joe Saz joining us here soon. Wanted to just go ahead and take a little bit of time to share my analysis real quick, and then we'll be bringing him on here, expecting about a half an hour or so. And it wasn't really something
Cool.
I was planning on until seeing the recent price action, because this is the perfect time to have him on. I was definitely planning on having him on soon, but seeing that price is now keep continually testing the $10,000 area, this is a very important time to pay close attention to the order book, and this is when I will be really paying close attention to see what the selling pressure is like relative to the last couple times that we tested it. And that's actually what's very important for me. If I wasn't watching the order book the last few times we tested 10,000, I would have nothing to compare the current action to. So as we're still in this reapproaching that level, I'm going to be paying very close attention to get a feel for if the sellers are more or less aggressive, or maybe something similar. So really excited to have Joe on, who he has been
Mhm.
instrumental in developing the tools on TRDR, which is a tremendous way to visualize what's going on in the order book. And it has been one of the things that I've been paying very close attention to since he showed me some of the finer points about how he uses it. So really excited to have him on today. If you guys have any questions for him, please ask in the chat. Daisy will be keeping an eye on those. And as long as there is time, we'll get to as many as we can, but
Definitely.
certainly not going to be having another stream that lasts too long. Last week was
Last
a
week
bit
was
of
3 hours.
a
But before we
celebration.
dive in, I do. This is the first time we're live after the event, so I want to still want to wish you a happy happening on Bitcoin. It all went well, and we were on Tone Face's live stream, which was just epic. I think he got over 120,000 views on that one already, if it's not more than that. So I think you were on that stream for about 5 hours or something, right?
I was on, I'm not sure how long. I finished it out with them, and I stopped in during the halving when that was occurring, and that was truly a memorable experience. It was something I will absolutely never forget. We were, at least I was surprised when the Winklevoss twins showed up and gave a little talk that was actually very, very eye-opening to me. It really helped me to rethink some things. And when you get to hear some thoughts from some individuals like themselves who are really very macro thinkers and some of the most experienced in the space, you can really pick up some insights. So I'm not sure if there's a timestamp or when exactly that is on the YouTube video, but it was right when the halving was going through. If you guys haven't seen it, I would strongly recommend it. And they were talking about how the narrative has changed since the last couple halvings. And two halvings ago, the narrative was all about Silk Road and money laundering and criminals using Bitcoin, and there being absolutely no other use case. And then by the next halving, it was a lot of blockchain, not Bitcoin, a very um, unsophisticated understanding or a complete lack of understanding of what it is that gives Bitcoin value, of what it is that gives blockchain value. And also during the last halving, what did you have? You had people like Jamie Dimon saying that anybody that I think owns Bitcoin is going to be fired from JP Morgan. Like he basically came out and forbid any employees from JP Morgan to invest in Bitcoin. And you had people like Warren Buffett coming out and publicly against the technology and calling it a bubble and all this sort of stuff. And what do we have now? Uh, Now we have people talking about gold and comparing Bitcoin to gold. And we have people starting to talk about and understand stock to flow ratio. This is much, much different than anything that I have seen in the past, and that is what really is the type of thing that paves the way for another massive bull market, another major leg up in adoption. That happens when the market becomes more sophisticated and cleanses itself of the ones who are only in it to try to get rich quick and that sort of stuff. So really excited about what we've been seeing, and yeah, we'll be having to dive right in. I don't want to take too long and keep Joe waiting too long. So.
No, dive in. By the way, Toonwees's live stream is timestamped, so just go to Toonwees's channel and you can find the timestamp on the Winkelfast tweets. You dive in.
Excellent. And quick question, Daisy. I'm hearing like cars driving by in the background. Is there maybe a window open that could be closed? No.
No, there's no window open. No.
All right.
It's exactly the same setup as I had last week. So.
Cool.
But I'll mute myself.
That'll be great. I appreciate it.
It might be busier on the street than last week.
It might be.
I'll mute myself.
People are starting.
You go ahead.
Out and about.
You go ahead.
Okay. So hopefully I can see my screen okay. I think everything looks good. Let's get this up out of the way as much as we can. All right. And maybe let me check one more thing. This is what it is. I'll move that down a little bit. All right. So definitely seeing some bullish signs from the recent price action, no doubt about it. Very happy with this reaction that we're seeing off of the 200 EMA. That is where I was looking to buy a pullback after the halving, and was not ready for this sharp and fast move down that happened. I think we discussed this last week. I had to basically run as fast as I could, log into the exchange, and was needing to market buy opposed to getting the perfect orders filled. But really happy to see that the price did go ahead and break through that 50 EMA. What I did was trim around 93, 92 to 93. I was worried about this acting as resistance and turning into some sort of head and shoulders. So I just went ahead and took some off of the table there, and then the price shot right through. So I just viewed that as a really good sign and went ahead and entered orders to repurchase what I sold. And got just a slightly better price, nothing to really write home about. I think my sell was like 92.50 on average, and then I think my re-entry was around 92, maybe 25, 9200 or so on the 50 EMA. So that got me back into what I sold potentially preemptively. And now I am paying very close attention to see if we're going to be able to take out these local highs. And I'm seeing a couple patterns that have caught my eye for sure. And that is the cup and handle, which you all probably saw before I erased it. So we'll just be looking at a really nice start to a cup and handle pattern. I'm really liking this handle action. One thing leaving a little to be desired would be the boundary line, the ice line. It's not a neckline, it's not head and shoulders, but it's this little guy up over here makes it not quite perfect. It would be much better if this high was in line with these, but that is it's getting rather nitpicky. The other thing that I look for in cup and handles is for the handle to basically be a bull flag, and I do believe that is what we are seeing. Okay. So yeah, really liking this setup right here, with the cup and handle that could also be considered a bull flag, and the measured move would essentially be the same. It isn't confirmed, but we can still start to...
Yeah, so I was going to ask you for targets.
Yeah, absolutely. And so I guess the one difference is the bull flag has already confirmed. So we could use that to already have a target from the bull flag. And then if we wait for confirmation, I would say a 4-hour close above 99.70 would confirm. That would give a pattern target to 11,250. And if instead of labeling it a bull flag, or if in addition to labeling it a cup and handle, we also label it a bull flag. And I kind of like this because it's got one of those poles that's a bit parabolic, which just shows that there's maybe good momentum, good juice behind it. So I definitely like this interpretation, calling it a bull flag with a bit of a parabolic pole, and then saying that that did confirm either here or here. Let's use the more conservative target, and that would be 10,700. So that is what I've been looking for, is 10,500 to 11,000 as the next area where I'm really interested in this thing going, where I would be looking to take some profit. And if I was able to do so, I would basically enter orders under 10,000 to buy back, because I think what makes a lot of sense to me is blowing right through 10,000 and then coming back to retest it for support. I would like to see that a whole lot, and it would just make sense. So let's see what else, not needing to cover too much today until we get Joe on. So let me just quickly take a look at some of these other tools. Daily Ichimoku clouds looking real good. No C clamp. Everything is fully bullish. That looks real nice. One thing I wanted to point out that I've been paying close attention to is the 50 EMA on the 12-hour. It's been a great way to determine the trend. When price is above it, it should act as support, and you should expect higher highs and higher lows. When price is below it, you should expect it to act as resistance and give you lower lows and lower highs. So that was another reason why I was so interested in buying here. We had the 200 EMA on the 4-hour along with this 50 EMA on the 12-hour, which has shown a lot of strength as support and resistance. What else were we looking at on the 4-hour? There was a potential for a 9 that wasn't too worrisome. I posted a bit about it in the chat, in the Telegram. So we had this 8, and then this was, I think maybe, no, it never was a 9, but we were looking at this 8, wondering if what that may lead to, and I was looking at this as a kind of a similar spot where the 8 came after a 2 candle correction. So you get a green 8, but you just had 2 red candles, and you're getting near support of the moving average. So that's what I was mentioning, and thinking that potentially this could get us back down to retest that 8,800 area, and I did have some orders set there below 9,000. I'm gonna have to double check those now that I think about it, and it doesn't look like that happened, being that we have now kind of, you know, turned the corner, got a Bill Williams fractal with a low below 2 higher lows and below 2 higher lows, and now we've got the green 1. A green 2 above a green 1 would be a buy signal based on the TD sequential. Okay. And now I guess would be a good time to mention that I do expect to have the new version of MSR, the MSR Trader Mode beta version available by the end of this next week. And I'm very excited about that. We've been testing it, spending a lot of time on it, working really hard. Big shout out to Mr. Johan Duplessis for all the excellent coding he has been doing. Absolutely wouldn't have been anywhere near possible without him. And now we feel comfortable to go ahead and get that beta version out there. Now I'll just need to get some time set aside to do a video that covers it, and then those who are members, those who sign up for the investor mode, the original version, the trader mode beta version is going to be available for free to all those members for the rest of 2020, and that will be kind of the beta period for the trader mode. So really excited about that, and that is something we can take a look at here very quickly. Nope, I need to get the new one on my chart. 1 second. And this is something that Daisy's been making some trades with herself. Is that right?
Definitely, yeah. I'm one of those testers.
And how's it been going?
Well, yes, excellent. It's been going excellent. I mean, you have to follow the rules, right? Whatever system you follow, you have to follow the rules that are set with the system. So Sawcruhteez walked me through the system, gave me a whole set of rules to follow. When to get in, when to trim, when to re-enter, when to trim again, when to re-enter, when not to re-enter, when to fully exit. So I've been doing that diligently and on shorter time frames, so just to keep the action going. And I can say that it's been really working very well, and yeah, I'm pretty impressed with it. I think you got something going there, so.
Well, thank you so much. I'm so glad to hear it.
Yeah.
How you said you've been trading it on some smaller time frames. What's the smallest time frame you've been using it on?
15 seconds.
15 seconds.
Yeah, I never thought that I would be somebody looking at a 15-second chart, because usually, you know, people say, don't zoom in too much on time frames because it will make you mad. But I'm just it's actually very relaxing because I'm just following rules. So as long as I don't see anything happening, I'm not doing anything. But as soon as action happens, of course you have to be quick, right? When you're in the Bitmex account. But it's actually a lot of fun because it's just robotically following the rules, and it works. And because I want to get into it more, I chose that small time frame, and I tested some different ones. And you also recommended 15 seconds to me. I think you remember. And also, so that's just very small trades, like literally like penny trades. And on the 3-minute chart, that can actually last for like 6 to 8 hours. A trade on a 3-minute chart also works very well. But I've also been eyeing the 5-minute chart and the 15-minute chart. I think it works on every time frame, as long, of course, as you keep the rules in mind, which is the downfall for every trader. When you start to feel greedy or think you know where the market is going, that's exactly when you're going to get wrecked.
This is exactly right, and thank you so much for sharing your experience. That's so cool to hear,
Yeah.
And that's really great that it's been going well for you. And so yeah, I do plan on releasing a video that explains the trader mode and kind of the different areas, but that won't include all of the different rules that would be used to trade it that could be stuck to, and that's when I will be setting up another webinar for advanced MSR. And for the MSR trader mode, there will be an online webinar that will be available to anyone who would like to attend, and I think that that's going to be really, really exciting. Actually, just did a follow-up session yesterday to the Advanced Consensio workshop that was done in Las Vegas at Unconfiscatable. It was like a 4-hour session that I did. It was free of charge. I just wanted to check in on everybody and make sure that everybody was sticking to the rules, like Daisy said, because it's so much easier said than done in a classroom. And then once you get some time to actually, try to stick to the rules when coronavirus hits, that can make it a whole lot more challenging. So yeah, this is it, and it will be ready within the next week to those who are currently members of the investor mode. And we can see just real quickly how these recent signals have been performing very, very nicely, with the beach right here being the area above the ocean, which is what signals our entry. If the beach is below the price, it is a buy. If it is above the price, it is a sell. And here, look at how beautifully the sky is the area where I will look to trim, and that is where this most recent run-up got right up and kissed that sky. And here I was not trusting that this thing could get up there. I was trimming down in here. If I would have listened to the indicator, I would have gotten a much better price on that trim and then done much better on any re-entry thereafter. So that has been really, really cool to see this get to work in real time. And let's go ahead and take a look at the smaller time frame that Daisy was referring to, and that is the 15-second chart. Just to see how these recent signals have been performing, and they do look like they're performing well. It's a sell here because the beach is above the price, a trim here, re-enter here, trim here, trimming here, and then notice how this changes colors. When it gets black, that is our signal for a reversal. So right now, the 15-second chart is actually signaling that we should reverse, and the ocean is thinning, so that is actually confirmation. Back in here, we got a black sky, which I would call a storm, and that did have a reversal shortly thereafter. Before moving on, I just want to show how well that indicator has been working for Bitcoin on the 4-hour chart. That is one of the most exciting parts about this for me, is the ability, or the original signals. It was all about the ability to stay in trends for prolonged periods of time, and then try to stay exposed as long as markets are trending, and then get out before it fully reverses. And adding a exhaustion indicator can really help a lot, specifically if it's an exhaustion that identifies where to trim. So back here, it identified the perfect reversal in January of 2020, and I was all over that. We hadn't had the indicator developed yet, but I was starting to use the tools that went into developing this, and was very public about my long here. Had a nice reversal call right here at the top in 2019. That's a little bug. I'm going to have to take. Oh, no, now I see what's going on. Okay, so that's a nice signal there. What happens when the beach disappears is what used to be a no trade zone now actually becomes a tradable territory with the sky and this red area, which is being referred to as the underworld, where the trends like to go to die. And now those indicate where the ranges should happen. So just a couple more good signals here that I wanted to show. At the bottom in 2018 and the beginning of 2019, And then also at the top there in 2017. So it's just been really, really neat for me to get to trade this myself on something like the 4-hour as well as something like the 15-second. And as Daisy said, it's sure a lot of fun, a lot different than swing trading and waiting, getting one signal every 6 weeks when you're trading the 15-second and consistently getting signals and consistently getting opportunities. Much different. So anybody who is interested, I would encourage you to go to Sawcruhteez.com, and that is where you can read up about the original indicator. That is all about the trader mode signals. That does provide the foundation for the trader mode, but this investor mode is mainly for people who are just wanting to do the longer term stuff, the trades that can last months or even years. That's what the investor mode is for. And then the trader mode is for the people who are more interested in actively trading even really small time frames. So if you come over here, you will see that the price is $500. You can get a 20% discount if you sign up with an affiliate link to Bitmex, Bybit, or Deribit. And that is it. Maybe I should think about including like a signed book to anybody that signs up. That's maybe a good idea. I'll have to think about that.
Good idea. Yeah.
Or maybe.
And I love your terminology with the system. All the names you came up with.
Oh, I'm glad to hear it. Yeah, that's been a lot of fun for me too. So I'm glad that you're enjoying that yourself. I ended screen sharing.
Yeah. I have to also talk because I'm mic testing. I'm gonna. Okay, live chat. Is this better? Okay, continue. So.
Okay. All right. And I'm going to move on and quickly take a look at gold in the S&P 500 unless there's any questions you'd like to ask before.
Does this mean you're done with Bitcoin, TA? Because I do have 2 questions from your chat. And
we will come back to Bitcoin TA with Joe. So if it's better to wait for him, then let's wait for him. But if not, let's do it now.
But I'm fine with that. But Joe doesn't do any MAs. You know, like okay. MATA.
Yeah.
Whatever you prefer. I mean, he'll just chill. I'm sure.
Okay. Yeah. If it's not a question directed towards him, then let's just do it now.
Okay. Somebody's asking about Consensio on the weekly Golden Cross coming up. Luis is asking you from your chat.
Okay.
He's asking, should we expect the price to go in the direction of the EMAs? Should the zone of the cross provide good support in that case? So if Bitcoin gets the Golden Cross, should we expect the price to go in the direction of the EMAs?
Now, if he's asking whether or not we should pull into the cross, I would say it looks like that's already happened to me, being that this candle right here came within a whisker of these moving averages as they're crossing. That was a pull into a golden cross. It still hasn't, it needs another week. This would need to still close above the short term, closing above the long term before that actually is a golden cross. But for now, I wouldn't see any reason to necessarily expect another pullback into it. And definitely a really good sign to see that the long-term moving average has flattened and now started to turn up. So there's only one step away to turn Consensio fully bullish, and that is a golden cross there. So that is curious. I wonder if Tyler would have been buying these dips. Probably after this turns up, that is his most important signal, is the angle of the long-term moving average. So might have been a signal for him to start scaling in, and then as a cross would be looking like it's pretty likely in the next week, that would be potentially the signal to be fully entered. So yeah, it's looking good there. And
yeah, I wish Tyler was here to give us his opinion.
No doubt about that.
Yeah. One little other question, Ty. Which moving averages are the most important ones to look to on a short and long time frame? Because this guy's got 50 and 200 EMA on default, but do you change your EMAs for smaller time frames? That's the question.
50 and 200 is always my default, and then if it seems like price is never really respecting it, I will then look to adjust those moving averages. So good question. All right, and wanting to get Joe on here, but definitely need to take a look at the S&P as well as gold very quickly. And I just want to point out what I'm looking at. Interesting. I mistakenly had the 2-day, clicked on the 2-day, and it looks like that has a potential pull up and into a death cross occurring, which makes sense because that recently happened on the 1-day. Got the death cross here. Now we pull up to test the 200 EMA, and that was my signal to sell. I highlighted on prior, I don't know if it was the last show or before, but my sell zone was above this horizontal and my stop loss was above this horizontal, or a golden cross, whichever would happen first. So now I am entered into maybe 40% of the exposure that I was hoping to build, because we didn't get up towards the, I had orders layered, and I think about half of them filled, something like that. So now we do have, for the first time in this whole run, a lower high and a lower low, which is very, very significant. And that is also something that is right in line with what I've been keeping an eye on after learning from Fibbo Swanee, which is the critical 0.618 fib retracement. So we have, and this is what him and I have been so intrigued by, is that we often get signals at the same time, and it's really curious to think about, and this is what I've seen time and time again, is these critical fibs lining up with moving averages. Here you had the 0.5 with the 50 moving average, and here there's 618 with the 200 moving average. So a good confluence of resistance that if we can get back above this area, I may be even looking to have a tighter stop, because this looks like it should be an area for this thing to top out, and if it doesn't, then I probably would want to reevaluate. So yeah, definitely going to be paying very close attention to that 200 EMA. Notice how support, resistance. So that is a critical area of support in bull markets, and if it doesn't quickly regain it after a death cross, then it would suggest to me that a long-term bear market is in the works. We'll also be keeping my eye on the weekly 200 EMA. We are getting rejected by the 50, and I would expect potentially some support from here, and then something like that. So this is where I'm looking to trim. You can see I have some alerts. So we have the 0.382, and we have the 200 week moving average, exponential moving average. So there will be another, what's up here, a confluence of resistance, down here a potential confluence of support that would allow me to, that's where I'm looking to trim, and then would re-enter if it did bounce and give me a better price. Any questions before moving on to gold?
No, not specifically. I just have to put a little filter on my mic, so you just keep talking and I'll just be out of the screen for a second, yeah?
Your pop filter?
Yeah, that's it. I'm getting some complaints. It will be better, guys. You just I'll keep on listening to what you're saying.
And I think you sound great, so don't worry about any pop that people are complaining about. Okay, I did buy a little bit of gold recently. Just on a speculative position, not to add to my long-term trade. And that is a difference because of the instrument that I will use. And here we had been consolidating into a beautiful ascending triangle. That price kept trying to come back to the buy zone, but it failed to do so. And that is a strong sign. It tells me that a lot of people are viewing this as support, and they're front running because they're more worried about getting filled than they are about getting the best possible price. I know exactly how that feels, and I'm sure that others do as well. When you have these orders and they don't get filled, you start to wonder, well, I mean, 1663 to 1667 isn't that much of a difference, and you know, there's this horizontal right here at 1670. Should I maybe use that to buy? And essentially the idea is that when front running happens, it indicates a market with a lot of momentum that is, you know, really the bulls are very much in control. So this is a very strong sign and something that I pay close attention to. When price gets close to my moving average that I would expect a correction to return to, but it doesn't quite get there, and then it forms this pattern, which I expect gold is just the perfect trading instrument because it's basically purely speculative. You know, there's no stock, there's no earnings. You know, there's it's just basically entirely speculative, just like Bitcoin. And those types of assets are the perfect tools for the perfect assets for patterns. They will consistently paint pattern after pattern when they go on big runs, and that's what I'm starting to see here. So did go ahead and buy on this breakout that confirmed. I basically entered, bought 1730 at market, and then entered a limit order to buy 1715 on a throwback to retest prior resistance for support. And now I'm not sure if I should expect a potential horizontal resistance to lead to that. Possibly. So I will be definitely looking out for something like that, but would prefer to smash right through. And the target from this is going to be based on that, which is about $91. So we add 91 to right here. That gives us 1810. And that is a really good target because it lines up nicely with my horizontal zone. So here we are on the weekly, and this is my next horizontal that I'm paying very close attention to. That's absolutely where I would be looking to take some profits, and that is at right around where that pattern target would be. So that's something that I really like to see, is pattern targets lining up with horizontals. So I will continue to look to patterns to scale in, to re-enter, to add into a profitable position, and then also to determine targets to help to know where to trim. And we'll be keeping a close eye on any pullbacks to find support around the parabola that has been acting as strong support throughout this move that started at the low in the end of 2015. So that is what I was wanting to cover. And I am going to go ahead and send Joe the link right now. If there is any other questions while I'm doing that, let me know.
Let's get Joe on. Yeah.
All right. So, participants, right. Copy URL. Okay. There you go, Joe. That is sent to you 2 times on Telegram. And as he is coming on, I want to let everybody know that my affiliate link for TRDR is below in the description. And that is what we're going to dive into here. I have been using that a lot myself lately, and have been really excited about how it has complemented MSR, specifically the trader mode. And with that being said, there he is, and he's wearing a hood.
There's the man. There's the man.
How's it going? What are you smoking today?
What am I what's what today?
What are you smoking today?
This one is a AJ Fernandez 1996 Oscuro.
That sounds fancy.
Yeah. Limitada.
Yep. So I'm sure that most, if not all viewers watching today are familiar with Joe Saz, but for those that aren't, let me just take a minute to introduce you before we dive into some charts. So Joe and I have been getting to know each other over the past year or so. I basically kind of got connected to him through Tyler Jenks and Leo Wald. Was fortunate enough to join him on the Block TV. I think it was Trader's Take, where we would get up bright and early to share our thoughts about the recent action in cryptocurrency. So that was when I got my first kind of taste of the way that Joe looks at the markets, and I quickly was able to sink my teeth into some of his techniques because I had been watching a lot. Let's see here. I don't know. Okay. I guess somebody saw the passwords trying to get in. No, thank you. Yes, I've been watching a lot of the order book myself, and I think that that's a really good way to get your finger kind of on the pulse of the market. I think of the old days in the open outcry pits where the best traders would really just have a really good feel for the environment, the feelings, the emotion, the atmosphere, the trend, based on just, how loud people were saying buy or sell and that sort of thing. And I think that the same thing can be done if you watch the order book basically day in and day out like Joe has. So that was something that I had done a lot of myself, and I had never come across ways to visualize some of the things that I would look for or could see, and that's where I became extremely intrigued with what Joe put together with Trader, TRDR, and affiliate link is in the description, and I am really excited about sharing that with everyone because of how well it is, basically how objective it is, taking the information from the order book and using that to provide buy and sell signals, and then also how it is outlining critical areas of horizontal support and resistance, and yeah, a lot of really cool things that can be done with it. So Joe, thank you very much for joining us today. It's been really neat to see all the hard work you've been doing.
Thank you, and it's a pleasure to be here. It was great to see you and lose all my money, all of it to you on Friday. And yeah, thanks for having me.
Absolutely, and I'm always up for some pokers.
Sorry, in the get to know you, I kind of missed some tropical island where, this is the first time you, me, and Joe are together on a live stream, so we have to bring up Bali, guys, because we spent the most amazing week there during the Financial Summit hosted by ToneVase and me. And had a lot of poker games there, and that's where we also got to know each other way better.
Yeah, that's where we became friends. I feel like I think I knew deep down inside me and Sock would be friends one day. Meeting up in Bali is when I knew we would be brothers, and that was a big, happy to know that there's someone in the world who is on a different level.
Yeah, that really was something, a special trip, and absolutely, I really got along with almost everybody out there, and made some friends that I think will last a lifetime. And out of all of those, Daisy and Joe were the two who I really expect to be closest with moving forward. We really were three peas in a pod, and it was a lot of fun to get to know you guys. And yeah, that's where we really became developed a really deep bond, and that's something that I very much cherish. And yeah, shout out to ToneVase for putting that together, and
look forward to again
Oh, absolutely. No doubt about it. And yeah, shout out to Daisy for organizing such a great event. That was really, really tremendous. So, all right, let's go ahead and take a look at what you've been seeing. Daisy's been collecting some questions. She'll probably have some for you. But before that, I'm just going to go ahead and kind of pick your brain a little bit. I would like you, basically, the question is we have. This is what the third time we've been up around 10K. The first couple times there were some strong signs to sell or that there was strong resistance up around these levels, and each time that you test it again and again and again, eventually you expect it to get worn out and potentially a big move to follow. So that's the main question on the top of my mind, and probably on the top of most people's mind is, do you think 10,000 is going to hold, or do you think that you're seeing enough in the order book that tells you we're ready to break through?
You know, the funny thing is that's like, of all the questions for you to have asked, that's the number 1 question that I have an answer to. And I'll explain it quickly. Do you want me to bring in any screen share? Or I could do it verbally, or I can bring up a chart. It doesn't matter to me. It's up to you.
Screen share.
Yeah, let's take a look at.
I'm gonna screen share and probably pull it up on like the 30 minutes, so we can kind of look at the macro, a little bit more of a macro picture. Even though you guys both know that I love spending the majority of my time down in the 5-minute, maybe 15-minute. I don't even go really as high as 15-minute anymore. But let's talk about something very important. We had a humongous static sell wall at 10K. The high of this candle is 93.39. And where did we break 10K? Right here. So you could see that 10K, when we did smash it, and this is on the 30-minute, this was smashed. You can drop it down to even the second chart to watch every order and how much they picked at it. But I was watching this thing grow, right? And one of the most important things to me is the longer that an order has been in the book, I call it a sleeper. It gets to a point where an order has been in the book for so long that chances are it's filled with sleepers that are just very interested in getting their orders filled. But more importantly, the longer a sleeper order has been in the book, most likely there are also stop buys at that point. So you get to a point where we broke 10K the first time, and it was around 1,000 Bitcoin plus buy wall, or sell wall, I should say. And not only do we break 10K with, you know, a $30 pop, that, you know, $30 to $35 is kind of like a signal to me that we broke it with a large number of stops and a very small number of market buyers.
And let me stop you right there to make sure that I understand what you're saying. So first of all, you're paying very close attention to how long an order is on the books. And right now on Joe's chart, we see the red lines and the green lines, and those illustrate big buy and sell orders. The more bright or thick the lines, the thicker, the bigger those orders are. So what you're saying is what everybody in crypto is seeing is the spoofers, that they come in and they put in an order and then they take it away, come and take it away. And here, if you have somebody who's just leaving it on the books, well, it's probably somebody who is actually serious about getting that. And then something else that you said was that if that is there for long enough, then you might have somebody else who wants that liquidity, so they put in a stop market order to eat that up as soon as price gets around that territory. Is that, am I understanding that?
Yeah. The logic, I would say, at this point is less whaley and more FOMO-y. More people that are saying, you know, there's this meme that comes to mind from the Matrix 2, and it's where Neo's talking to the architect, and he says, you know, we have broken 10K many times, and we are getting exceedingly good at it. But in this case, I argue the exact opposite. We are actually getting exceedingly worse at it. The last time we broke 10K, we went to 10.6, which was quite nice. That was, you know, around February, mid-February, early February. And I don't want to go digging through the charts. I know it's going to take all this scrolling. But if you notice, when we broke 10K, and I was watching this, probably even live, it only broke by a high of $10,067. On my high end of stops and FOMO stepping in, I usually see a flash of, on the high end, $80 above a target. And if it's going to be FOMO taking it off, there's usually less liquidity past a certain wall. So then price really moves in gaps, because you can see in the order book right now, there are liquidity gaps. There's one at 9,900, and then in between that, there's a 579 sell wall at 9,900, and then We have actually, this is stacked on the sell side. This is a terrible example of a book filled with pockets. Maybe on the buy side is a better example here. A 176 buy wall at 9,600, and that 9,550 a 275 buy wall. But in between, we have a pocket as low as 15 Bitcoin. This liquidity of a $10 aggregation is easily filled by one order. Now imagine, liquidity pockets above 10,100, 10,200. I would expect the volatility and the velocity of the moves, if FOMO was driving them, other than just stop orders filling those walls, it would take off. It would hit a wall. It would hit that, 10-1 range, let's say 1050, the next area of strong resistance, and it would start testing that. And people would be punching it until it breaks. And that's what I look for. The fact that we broke 10K last time and really only broke it within my stop range tells me someone probably just wanted to push this thing to $10,000 to trigger stops. And that's it. And that's all we did. And that's very important to me that shortly after, we're coming back closer to recent history here.
And
We've been getting
sorry
close.
to interrupt you, but one question that I want to clarify for myself is you don't have any information for stop orders on this, or do you?
No,
okay.
That's just experience.
Right. Yeah. I just wanted to make sure there wasn't something that I was missing out on.
No, it's just a long time of spending time in the order book, I would say. I just kind of have a general. Some of it, I think I...
No, I get it. And thanks for sharing your thoughts.
Yeah, so you could see that 10K came back into the mix, and now this doesn't mean it wasn't there the whole time, but price is kind of coming up, coming down. So as far as distance from price is concerned, this wall became much more visible as price was climbing back above 9,000. So we get back above 9,000. The wall is clearly there. Again, don't know when it was added because we only have a 10% distance from price right now. And that could obviously be changed, but whatever. So the wall is back and it's strong. Looking at it right now, it's 1,200 Bitcoin static. I assume these are sleepers. I assume these are very, very serious sellers. They want their orders filled. I have every reason to believe that that is the case because we've come very close and they didn't flinch at all. And we failed to even hit 10,000, which is really, really upsetting if you're a bull. And I'm a long-term bull, of course, but I'm a trader and a realist, and so I have to objectively observe the market, So, anyways, I see this as a very, very key level that was really could have shown the strength of the bulls, but more of what it showed was their exhaustion in my eyes. So everything that we've done in the meantime has just been bulls further exhausting themselves. And our latest tests of these upper ranges are actually giving us a lot of sell signals, which is natural. Of course, the second this 10,000 aggregation, which is a 1,200 sell wall, gets pushed into the 1 to 2.5% aggregation, it's naturally going to make that appearance. But we also have 9,900, which is now even creating its own line. Maybe there's a couple that are more significant now. But there's so much resistance. A 578 wall at 9,900, a 4-digit wall at 10,000 flat, failed to test it a number of times. I believe bulls are exhausted. Bulls have left a massive liquidity gap as they've tried to push this thing up. And they've been doing this over and over again, overextending themselves. No bulls chase the book. We have low liquidity sweeps back to the downside, which are going to ultimately lead to what I believe a breakdown and most likely some sort of extended breakdown over the next few weeks. And I hope that we can get a lot of this done quickly, but for the miners' sake, of course. But I'm bearish, and I don't think that I love your cup and handle. But at this point, I don't think we have the strength to break it 10K right now.
Okay, and thank you very much for sharing that analysis. And I cannot say that I disagree, but I can at least be a devil's advocate to see what your response is. So I'll take over the screen share and just try to be the devil's advocate.
I do have some questions for Joe, but we'll get back to it when he pulls up TRDR again.
And could you stop screen share real quick?
Oh, did I? Oh, sorry. Yep. Go and stop.
And after I go over this real quick, then we will want to get into the those yellow signals that you guys are seeing. I need to make sure that this is in the right
Card
spot.
players and bandanas and cigarette stock. What are you doing? Are you self-destructing?
Are you kidding me? This is
hard liquor.
Joe, only we can see his desktop. The live stream cannot.
this is a fabric of America, buddy. I mean, this is who I come
That is a
from.
beautiful, beautiful image. I gotta say that's.
Okay, so the thing that I wanted to look at, it looks like I'm going to have to make this smaller. 1 second. So I am seeing some strong signs from the buyers on this breakout. So let's take a look.
Yeah, that's what I'm excited to hear about. I want to see the Sawcruhteez order book analysis with the volume delta because I know that's something that you are so keen on after such a small amount of time in this platform. So I'm really excited.
Oh, I appreciate you saying that. And yeah, that is something that jumped out at me very quickly when you said that because it really makes sense with how I think about the markets, and that markets are driven basically by bag holders, and that when a big amount of Bitcoin or the underlying asset changes hands, then it's a critical turning point in the market where one of those guys is going to be on the right side and the other is not going to really be able to get out without taking a loss for the most part. So right here.
Sock, do you mind if I say something?
Please.
Someone's talking shit about me, and I just like to set the record straight. It won't take very long, but when people do talk shit, I like for them to bring up some facts. So if you're going to go ahead and do that, go ahead to anyone who isn't in here. I have a group that has access to all of my trades live, real time, for free. You want to call me a fucking shit trader? Go ahead and bring up the proof. I'd be excited. I'm not immortal. I have been wrecked. But I don't like shit talkers without proof. So go ahead and check it out yourself.
Yeah, and, or don't. Feel free to do whatever you want to do, and just as long as you are respectful to the people who are taking their time to share their experience and their knowledge. Joe has been a tremendous asset to this community, and anybody who doesn't agree is entitled to their own opinion, and you can get out. So
I just want some facts is all. I just want some facts.
Looking at this horizontal boundary at 95.68, 95.70 was critical horizontal zone, and then we had this breakout candle right here, and it's with a nice volume buy side delta telling us that a good number of Bitcoins changed hands on that candle. So I'm trying to figure out how many. It looks like, wow, 1.134K. So over 1,100 Bitcoin were purchased right here. So that's a big whale taking a big position, and he's going to be very interested in defending that position. So when I see a big spike in this volume by side delta, which is available only on TRDR.io. And I think, what is there, Joe? A 2-week trial? What's the trial?
Free. You actually get a free pro trial, free 2-week pro trial. You get a 30% early bird discount if you like the platform. There's a YouTube video that I have if you want to have everything set up, a setup and tutorial. But currently, it'll be a free 2-week pro subscription, 30% early bird discount ending June 8th. So get your fingers in the pie, try it out. If you don't like it, then you'll be able to walk away from it without any money spent.
And you definitely want to try it out. If you get a couple weeks to try all of these tools, get all these signals for free at no cost, you can get a feel for how well they're working, how well they may complement what you're using without having to come out of pocket at all. So strongly encourage, there's nothing to lose to go check out a free trial, and would appreciate if you use the affiliate link that is in the description. Okay, so when we get a big amount of Bitcoins that changes hand, it tells me that this guy either bought the top and the market should immediately dump, or that whoever sold to him is going to be having to buy back at a higher price. So when I get a big spike in that volume by side delta, I will draw a horizontal on the top of that candle that caused the spike. And so what we're seeing is that we had a big volume supporting this breakout, and then support has moved up. And it looks like the sellers are trapped. So that would be my rebuttal, is that I am seeing a strong buyer taking this thing through 95.70, and then probably the same guy moving up and supporting this thing up here, basically leaving the guys who sold to him in the dust potentially. That is something that I would be curious to get your thoughts on.
Yeah, your analysis, I think, of big spenders, let's just say whales and even maybe clusters of buyers, I think is very useful. The thing is, I think in Bitcoin, I often say you got to sprinkle a little pepper on your analysis. It's a very irrational asset, and this could simply be people buying the top. This is a resistance area that we've met with the signals time and time again, and these signals I've been working on them, and I haven't had one experience other than the dump, which was that 52% or so dump top to bottom on March 12th. That is the only example that I believe you would have been wrecked trading this so far with the signals and running back through the whole history since I've had the signals available. So I'm looking at this, and I agree with you. I think more likely this is a cluster of buyers buying the top as opposed to a whale defending his position, because there is so much resistance up here that in order for a whale to kick this off, a whale needs to be convinced that this is the start of a trend that's going to break 10K, 10.1, 10.2, and all these other major zones. I after watching the books, watching the trade history for days, obviously weeks now, I've been pretty much on streaming almost all of it. I've really been seeing just dust. We might get some pumps, and then it's dust, and there's no coverage. There's no one chasing the book. And if there's no one chasing the book and creating support as we move up, and then what I call it is basically we're building a ladder and we're skipping out on some rungs. And so what's going to happen is when you're trying to climb back down this ladder, you forget to build 10 rungs into it, you're going to fall pretty quickly. And that's what I think is happening here.
I have a question from Fibo Swanee. I think that's the perfect moment to ask this, because it's about reaching that level, Joe.
Great.
So Fibo is asking, if momentum starts to build as price approaches order levels like 10K, the orders can be pulled. Is there something that can help you to see this coming, where resistance get busted? Yes,
simply trader on a smaller time scale. That will show you, that's, I've done it a number of times, the 1 second and the 5 second. I've seen walls literally just look so strong, and a 350 sell wall or buy wall, let's say. And then you can watch the second 10 Bitcoin got eaten out of it, they pulled the rest of the order, and then the price flashed right up. So I think sometimes what people do is they try to hit the number to trigger orders, and if there is support, if there is resistance, it's very possible that someone is trying to spoof, and that's obviously someone that would pull their order quickly, or a scared buyer, scared seller. And that is something that you can detect on a smaller time scale using Trader and the order book top levels. I have seen it happen, but judging by what I've seen 10K do for the past number of, let's say, days, maybe to a week, because we haven't really been testing it since the last time we broke through it. It's been a 4-figure sell wall, hasn't really changed consistency at all. I have to assume that this is a sleeper bet, that we're not going to break 10K, and I have a feeling these sellers want their order filled.
Yeah, I do kind of get the same impression as yourself, being that just from what I've been seeing. At first, I wanted to give the devil's advocate, but now I'll share what I've been seeing out of these order book top levels, and that is these orders that Joe was originally talking about. And we had big sellers up at 10,000 on this first time, that I viewed that as somebody who is either looking to take a big amount of profit and or enter a big short. And then as I was looking, it was actually on Joe's show, I had drawn some horizontals based on some stuff that I was seeing out of the order book, and I explained exactly why. So if you go over to Joe Saz's channel, he has his own channel on YouTube where he will often live trade, and he's been streaming a lot, sharing his analysis as there's been some good volatility here around the halving. So I was on his show, and I had these horizontals outlined, and I thought that, and that was a big reason due to what I was seeing out of the signals and the top levels, and I was expecting that potentially this guy, if he was entering short, that's where he would be looking to cover, and that a potential range between here and here made a lot of sense. And now we're seeing very similar things right here. So right here we did have a that seller kind of came back. If he sold over here and then got out here, it looked like he got back in here, or it was just the market generally not wanting to accept five-figure Bitcoin just yet, so the price coming up just resulted in a lot of demand, however you want to think about it. And then what was interesting, this time we had a big buyer stepping up to the plate around 92.80, and that was very well supported. It looks like this guy, to me now, I do think that there could be potential for, like you mentioned, if this is whales accumulating, they've got to be certain a big move is coming or something along those lines. Potentially now, instead of this guy letting it come down to here, or the whole market letting it come down to here, stepped up and really took a big position right up in here, and now we've got this higher low, which does give the cup and handle. So as long as we are above 92.21, I am going to be expecting for price to break through here and get up to between 10,500 and 11,000. 10,700 is the target from the bull flag, and now we are seeing that this order is coming back. So I'll be very curious, like Fibbo asked, to see if this gets pulled, because I'm kind of starting to think that it will, seeing how much this moved up here, and maybe it is, like Joe said, an empty a ladder that doesn't have a rung built in where it needs to. And that's a very important thing that you said, a very important analogy. This was something that a lot of people talk about, this idea, who pay close attention to volume. People like Wyckoff, WD Gone. I've heard WD Gone refer to it as an energy gap, and where these energy gaps occur, you just fall straight through. So that is definitely a very realistic possibility. But I do see here we've got this guy stepping up to the plate, filling, and then moving up. So the support is moving up, and then here support moved up. So I will be very curious to see if we can continue to support 97.40. And now I'm going to want you to just take a second to, I'll give you back screen share to explain to us these yellow things that we're seeing above and below the price. So I'm going to send that back to you. And while I do that, a big shout out to Lucas Mattel for the 200 tip, 200 Czech krona. That's very cool. Thank you very much. I'm going to assume that that was meant for Joe, but I'm going to keep it all for myself.
No, that's a very, very generous dude and a very generous tip. And I'm so happy to be here, and I love, I love all the support you have here, Sock. And I'll first also devil's advocate myself while I'm screen sharing and kind of on the topic of a potential breakout.
Great. And I'm listening. I'm just refilling my water real quick.
Cool. Yeah, the devil's advocate thing in me is saying, we really have pulled back and found some amazing support in these lower 9,000 levels. And that support is kind of creating this pretty small space that ended in a breakout. Now, it ended in a breakout, and I believe an overextended breakout, but still support nonetheless. And so that was very interesting to me. Mind you, one of these supports was a big 4-figure wall that was actually a spoofer. He pulled his order. It was a 4-digit wall at 9,300 there for even days. And he put in his order right after the wick that broke 9,300. And we were watching live when this guy went from 4-digit wall to 350 to like 30 and filled. So, you know, the downside, I think, is a little more scared of the action than the upside.
Could you, before moving on, could you tell us, so the volume by side delta there at the bottom, big seller at the bottom, how much Bitcoin was changed there?
Hands. So we had a seller, let me just one tick over, 1,000, 1,100 Bitcoin bought, 2.6 thousand Bitcoin sold, and a sell delta of 1.4K.
Interesting. So we're seeing a number of these deltas that are around, 1,100 Bitcoin, 1,400 Bitcoin. It seems like it might be the same player. That's kind of my read on this, and that maybe he pulled that order there, but he did so to scare the market and then to buy up his position of maybe 1,000 to 1,500 Bitcoin.
Yeah, here's 1,400 right there. And it's very possible that the liquidity was there. It was a 0.49 slippage, assuming one buyer in a 5-minute period certainly would be consistent with that idea. But it's still super interesting to me that we've had support along the way. And that would be me saying I'm very curious about where I believe we're pulling back. And just to answer the question that you asked, what are the signals, the yellow signals and such? I have vainly called these Saz signals. Couldn't think of anything else in a rush. We call them Saz signals.
Status signals?
So Saz! His last name.
Oh, Saz signals. Oh, sweet. I like it. Yeah.
Yeah, we were we were just I was rushing through it, and we just started calling them Saz signals. So I'm a vain asshole. But the Saz signals, the yellow signals are an extreme condition of the order book where the bid to ask ratio, or the ask to bid ratio, is somewhere around 70 to 1. Basically what that's saying is bulls have pushed to a point where there is so much static resistance ahead that there needs to be a massive amount of market buyers. And market buyers are the known unknown in the order book analysis. We know that they're going to be there, and these are all market buyers right here. These are all limit buyers, limit sellers, market takers, buy and sell. So these are the people that we're most concerned about, when we're talking about the velocity or the ability to continue a move. Lately, it's been a lot of dust, and by dust I mean somewhere around 0.5 Bitcoin by thousands of dollars is really not much money. 1 Bitcoin is not much money. 10 Bitcoin becomes significant, and 100 becomes 50. 100. That's where we start partying. And a lot of these walls are going to require massive amounts due to the proximity of in duration to the last time that we attempted to break 10K. I have to assume that we don't have the same number of stop buyers here than we even did last time when we only made it as high as 1067. So we broke 10K, maybe, I can't remember the exact date, a number of days ago, maybe even weeks ago. But by that point in time, we had weeks before we touched 10K. Now we have had days to maybe a week or some change. Let me just get the answer to this. I'm going to pull up a quick Bitcoin daily and just look at the last time we broke 10K. Which was, I'm on a weekly, sorry. So we broke 10K, 10,079 here, and we kind of consolidated for a minute, I guess maybe into the daily close or something. But you can see the last time before we had broken the 10K range was a number of weeks, and it was a little bit of a flash. In this case, I'm inclined to think that that the amount of time to place a stop buy at $10,000 when you were back here in October and we broke it was that 4 months later in February. We haven't had nearly that much amount of time before we came back to test it in May, from February to May. 3 months time after a massive dump with a small check and a break to 1067, and now just a week or so, and I just can't expect that in a week's time, if we built enough stops to get us to 10.6, and then we built enough stops, and that's 10,600. Then we had enough stops and demand to break us to 10,067, and now we're days out from attempting to re-break it. I just don't believe that there's enough in the book or on the stock market buy side to break this thing and really cause a domino effect to the upside.
That's really interesting, and somewhere where I think it's a really important topic that maybe I might have a little bit of a different perspective, and that's a really, really interesting idea that I've thought a lot about when, say, a pattern's getting ready to break out, or a horizontal, in this case, 10,000. It's a weird dynamic where you need enough buyers to take it through, enough demand to take it through, but not too much. If you have too much demand, if everybody is starting to see this pattern and everybody's starting to buy into it, well, then the market is not going to let everybody make a bunch of money. So it's like you don't want everybody buying it, but you do need enough demand and enough lack of supply that you're able to smash right through. So the key for me for breakouts to occur would be big buyers that are like just a couple. If there is a few people that have been accumulating a lot, so that there's been a huge amount of buying pressure, but not too many people who are in a position to make much money, that is the situation. Or if there are too many shorts on the book that are ready for a squeeze, that could be another situation. So yeah, I am curious that maybe the less stop buyers is going to make it more likely for a breakout, because now that those people who've been trying to buy the breakout at 10K have failed like 3 times in a row, now that they're ready to give up on their same strategy, now that's when the market leaves them behind.
Yeah, it's certainly possible, and that's why I'm willing to. In this particular trade, where I started shorting this, what I've done is lowered my capital by half, which is something I rarely do. Very rarely. I give these signals a lot of credit, and I trust them a lot. Currently, probably below around break even, just below break even right now, and I'm heavily leveraged into this trade with little capital. And I do believe that these signals are worth taking very seriously. And so in order for me to get bullish, I would really need to see the support kind of just keep it up. If they can keep this up, then I'm going to be pretty bullish into at least some sort of ascending triangle scenario. Maybe do we even have one? Kind of a horizontal here, and some consistently lower lows going on. If we can keep this up, then maybe we can convince buyers that we can break some of these levels. And the reason I have this precision set to 2 right now is because I want to point out that at the $10,000 aggregation itself, all within $10,000, we have 2.5 thousand Bitcoin. And at $9,300 alone, we have about half that. So we have a ton of support to the downside, about 50% of the support as resistance at 10,000. So this is really, I don't think this is going to happen quick. I think we're still maybe days to weeks out from whatever the market decides, but there is a ton of support and a strong amount of resistance. And this does tell me, knowing that the majority of it is at 10,000 flat, this does tell me that if we break 10,000, chances are we're going to be rolling quickly through 10,000. Just because the majority of the stack is at 10,000 itself, 50% or so. But then on the flip side, if this is a serious buyer down here and we start pulling back, we got 992 walls at 9,200, almost a 4-digit wall. In fact, these two almost equal the entire $10,000 aggregation. 2 $100 aggregations equal almost an entire $10,000 aggregation. So is this $10,000 in jeopardy? Most certainly. This support looks very strong, not to mention the number of triple-digit walls we have behind it. So whatever move to the downside may or may not take place is going to be met with strong resistance, particularly I would assume below this point where you have the most amount of static orders in the book.
Very cool. So are you able to tell viewers how they would be able to use the trial version of TRDR to get those signals on their chart?
By the way, guys, we have about 950 live viewers right now.
Wow,
This is
that
great.
Is really cool.
Almost 1K.
I've been trying to get
that's unbelievable.
1K ever since, for a very long time. Ever since the Hyperwave channel, we were trying to get
Great.
1K.
I'm just going to be away for 1.5 minutes or something. I'm just going to cut my video for a bit, but you guys keep talking, okay?
Sure.
Cool.
Thank you so much, Daisy. And it was I'm so happy to see you. I love seeing you, Daisy. It's so great to talk to you.
Thank you. Same here.
So, Sock, your question. I know I got distracted by my last comment to Daisy there, and my wife came in asking me a question too. So you were asking about what exactly again?
If you could show the viewers how they could use the trial version of TRDR to get the Saz signals on their chart.
Yeah. So I do have a video, a full setup and tutorial video that includes how to adjust the widgets. Each one of these is a widget that is adjustable. And so I have everything set out in a YouTube tutorial, which is pinned in my Telegram chat. But to make it simple, all you need to do...
I'm going to make sure that that's in the description of the video so that viewers can go check that out.
I'll send you the link in Telegram. And anyways, I'll note that basically let's get rid of some of this noise. And I just want to quickly take a look at the aggregated book. Yeah, this is really tough to call. Okay, so now it's as simple as there's an indicator that I use particularly on Binance, US dollar tether pair, which I believe to be the most accurate set of signals, and these inputs to be the most accurate inputs. So what I've done is I've managed to change the opacity, which has to do with the ratio. At 100, you're talking, 100 to 1. At 20, you're talking 20 to 1. At 100, it's a big deal. But what we've done is refined it to 70, minimum bids 50, minimum asks 64. And this basically creates that yellow signal of an order book extreme, where chances are we're not going to be breaking through it. And again, I have to trust the signals because they've been so reliable. Really, I haven't made a losing trade in a little while now. The last little step here is in order to get these to really speak to you, I like to get rid of bids and asks and a lot of this, all these check marks in the front end. And then once we start with bids and asks, 1 to 2.5%, these are the trade signals that I pay attention to. Bids and asks, 1 to 2.5%. But for every aggregation, I add a yellow at the 20 value. So it doesn't matter if it's 1 to 2.5, 5 to 10, 2.5 to 5. I have yellow going all the way up the chart. I've unchecked asks 0 to 1% because, and the reason being, these are going to give a lot of false signals and maybe even give you a false general trend bias. Maybe you can scalp a candle, but I'm not interested in playing that game. But then again, back to bids and asks 1 to 2.5. Here we go, yellow at the 20 value, which is the most extreme value, again, the highest ratio, and on down the list. So just this alone is something that I've been using and trading consistently. Even in this, I'm a scalper, so I take the buy, I scalp out, take the buy, scalp out, and I'll do that 100 times. And I'll buy every single dip. I'll pretty much sell every single yellow. I'll buy everything on the bottom and I'll sell everything on the top. And I'll even go as far as add a lot of leverage to that because, I believe these signals are so accurate that you can really get yourself into a good position and prepare for possibly a yellow to yellow signal. This might have been a little dangerous here. If you were short here at 95, 91, and now you're trying to add leverage at 98, yeah, you're going to be a little scared. So that's why I'm a scalper. That's why I really, a scalper back to my roots. That's how I trade. But in this particular case, with our attempt at trying to break 10K again, failing recently, attempting again and making a lower low and meeting it with just such overwhelming opposition. I'm more interested in what happens to the downside, which I believe is inevitable. And if we can build support there, I'm just going to continue to trade the signals, and I'm probably going to be less and less certain as this becomes more of an apex type situation of a triangle where 10K is or that range is repeatedly tested, and we keep maybe building higher support levels. And so I'm just going to continue to trade signal to signal. But right now, I've had the vibe that bulls are exhausted, and they have been for quite some time. And I don't think 10K is something that they're ready to take out. I just don't think it's ready, and I don't think a whale, knowing that bulls are exhausted, even with potential FOMO in the air and bulls willing to empty their pockets, I still don't think that there's enough for a massive whale to push the price up too much higher than 10K, if it even is to happen, which would mean that a whale is less incentivized to even attempt that experiment. I don't think that they like to play with their money like other people do. Smaller money, let's say, does. So I really think this is going to be a top. I think we're going to break down probably in steep fashion. Let me get this back real quick to the precision mode 3, and we can just see why. There's really nothing here. We have a 76 wall, 75 wall. These are all dynamic. Everything above this, approximately this low 9,500 range, is going to be dynamic buyers. Each one of these guys can pull their order at any second, because these people in the book are only in there since this morning, 7:45 a.m. Eastern Standard Time. We're not even talking about a 12-hour period of time yet that this stuff in the book, even this most strong stuff in the book, has been there. So I think that the pullback is coming, and I'm more interested in what these guys do to support the price, and where we find that support. It's been very good so far to have found support, even violently at a lower low than this. I was happy to see that. I really do want to be a Bitcoin bull, and it has been my goal to have a nice long position for the ride to six figures. But I'm just not sure this is it yet. I do think that the next number of weeks will tell, but I think we are going to break down here. And if we can find support again somewhere in the low and even mid 9,000s, I do believe that's going to, each time we create these higher lows with the signals, I'm talking about with the signals, then I'm going to be more and more convinced that buyers will start to stack their orders more heavily, creating the signals. If we were to hit 10K and reject again, then at a higher point, we would get the signals back on the buy side. And that could easily lead to FOMO that involves people emptying their pockets inside out, given everything they got at this. And that is the scenario that I'm hoping for to the upside, but I'm cautiously optimistic on, and in fact more pessimistic, believing that the downside break is most likely because bulls continue to do this. And more importantly, when bears just sit back and they fill these aggregations lightly, and they sit there, and you can look at the sell side, it is not very dynamic at all. Maybe we just saw a tiny little splish splash right here, tiny little splish splash here, but these guys want their orders filled badly. And I have a feeling that this is, even if we get another signal, to me, it's just a double down. And I believe we're breaking down, and we're going to crush through this liquidity. And we're probably going to do it pretty quickly, even though we had a lot of volume to the upside.
Very cool. Thank you very much for showing us how to set up those signals. I definitely think that I've been following them myself very closely and been seeing some really, really cool stuff. So I think that this is the perfect time for people to go over and get that free trial so that you can set up the signals and give that a shot before that trial period is up. So you did share what the signals are. You see yellow on top of the price. That's a signal to sell. We then moved up a little bit and got yellow on top of the price again, so that was a signal to add, and you did so by increasing leverage. And I am myself very often adding on to losing positions. I just did so recently. The recent MSR signal came at a very bad spot, so I entered a really small position so that I could add when price pulled back, but I didn't do it by adding leverage so that I could potentially protect myself from a big spike down that I didn't want to be forced to sell on. So I'm curious, what is the stop loss that you will use, and what's the max leverage that you will use?
Yep, this is a funny question that I'm about to answer, Sock. So I'm going to tell you a little bit more. I did something a little slightly more sophisticated than my normal just add leverage. I'm probably around 30x right now on less capital than I normally would trade, as noted. I do believe this is a good signal, and I want to have a certain amount of Bitcoin short. But I also you got to get wrecked in Bitcoin sometimes. It's going to happen. It's inevitable. You're going to get wrecked. 52% swings to the upside October 25th. 2019, 50+% swing to the downside March 12th, 2020. You're going to get wrecked in Bitcoin at some point in time, unless you're out of the market, of course. And so I plan on getting wrecked at some point. So I'm just lowering my capital. I'm highly leveraged, around 30x, putting me in a strong short position. And what I did in this scenario, and I talk often about trading and moving profits to both your HODL and your insurance fund, which are money management principles I'm sure you're well aware of and even preach yourself to move profit. And what I've done with my insurance fund actually was take this signal and do a cross no lev short just to hedge my insurance fund only. So its goal isn't necessarily to make a ton of money, but to keep the money that I have there and to let this thing ride. And my stop loss would more likely be on the insurance fund, and it would probably be above 10K.
All right, great. Thanks for answering. So you won't necessarily have like a hard stop on the books. You will just have an idea of where, like we've been talking
even
about,
if
10K is
like last time we broke 10K, right? There were signals all over the place. Why didn't I sell? In other words, why didn't I buy to close out my short? Because we only broke it by $67. Very, very weak breakthrough. So I feel like I'm a much more dynamic trader, and I trade by feel. And me and you have discussed this in a lot, in the past. And that was prior to having Trader. Discretion and trading with discretion is something, and under pressure publicly is something that I'm very familiar with. So, it's just at this point in time, it's just about trusting the signals and using natural discretion to determine if and when I'm going to exit. And right now I've made sure to keep my highly leveraged position at a liquidation above 10K. And again, with the low capital it is, I'm not quite certain I'd be willing to pull. In fact, right now I'd more be willing to take profit right now than I'd be willing to put a stop loss in the book. I'd rather, if it was 11 o'clock at night, 12 o'clock at night, and I had to go to bed, I'd rather take the profit I have and run, or maybe most of it, and let the rest ride. And that would include closing my profitable cross no lev short that was purchased up here. And that trade wasn't public, but I can give the entry on that one, just so we know at what point in time I entered the signal. This one I entered at 98.36 on my exchange, which was about the third candle before the inverted hammer. So right here is where I entered. 98.36, approximately right around this range. I know it's hard to move, but right around here is where I entered my cross no lev short on my insurance fund. And over here is where I was constantly adding leverage to my position, putting my liquidation price above 10,000, truly believing that we will not break it. I just don't see it. I can't see the break right now. I hate.
Joe, can I ask you a question?
Before you do, I just want to respond real quick, and then I'll send it right
Sure.
back to you, because a lot of important things were brought up there, and I just want to make sure to clarify a couple things that Joe, it's clear that you have gained that you trust the signals, and you're ready to enter as soon as you see them, and you have gained a lot of confidence in your ability to manage those positions. So I just wanted to clarify for people out there who are interested in trying these signals. I would suggest that you start by using some sort of objective stop loss measure so that you can start to get a feel for, because when Joe first started trading these types of signals, he didn't have the feel that he currently has. So to do that, I think the best way is to use a objective stop loss, whether it be something like a parabolic SAR or just a set 5%
let me
weight.
answer. I'll give you the textbook answer that I give people, because obviously I trade differently. And if someone was to want to be a robot, how would you be a robot trading the signals? And basically what that would mean is I would say if you entered right here, your stop loss should be the top of the band. And then you re-enter at the next signal. You would re-enter here. You would have been stopped out. Let's see, your stop would have been here-ish. So maybe you would have been put in here, and maybe you definitely would have been put in here. So I would recommend nothing above 3x lev, and I'm giving you the safe, take it easy.
What I want.
Yeah, exactly. For the longer term, more midterm traders, as opposed to the scalpers like me who are willing to get in and way the heck out of a position within one candle, right? It's a very different style of trading that we have, but I would recommend that if you wanted a textbook answer, it would be the top of the signal is your stop loss, and you have to continue to play the next signals. Unfortunately, that might have meant you had some exposure here. Your stop loss would be up here, might have been triggered. So this is why I think, I would recommend more, as opposed to a 2.5%, because that's the top of this band. I would recommend closer to a 2.8 to 3% stop loss on 3x. And I'd recommend trading every signal. If you get another signal, take it. But I personally add leverage, and I am very comfortable with these signals. So yes, I do trade them differently, but that would be my version of a textbook.
And thank you very much for that answer. That's exactly what I wanted to hear, and I think that is perfect. So for example, if you're looking at the 5-minute chart, a 3% stop loss is well within reason, which actually justifies very high leverage. And the last thing I want to clarify before getting some questions is that everybody needs to carefully think about their definition of getting wrecked. And Joe mentions getting wrecked. You hear people talk about it all the time, and I'm of the opinion that that you should never get wrecked if you are properly managing risk. But I'm often using a different definition for that, and there is a very good method of managing risk which implements only, say, putting on 2% of my bankroll onto an exchange and then using 20x leverage with a hard stop 3% away. And then if I do get stopped out, I should save myself 20% of the liquidation fee that goes to the insurance fund. So at the end of the day, I would lose a little bit less than 2% of my bankroll. I wouldn't get liquidated, and I wouldn't consider that getting wrecked. I would just consider that taking a loss, a cost of doing business. So that is just one thing to clarify for people who are listening and maybe excited to try this out themselves. That risk management is going to be most important, and I really like the textbook answer that you gave us. So Daisy, I'm sure you've got a number of good questions.
Actually, the question I was going to ask was about this, because so Rolf, I think you know Rolf, Joe. I think he's a fellow Dutchman, a fellow Dutch citizen. So he's just saying the amount of leverage is not important without understanding sizing and exits. So you just said something like you were 30xing the trade because you were so confident.
Well,
so Rolf is asking you, Joe, to talk about sizing in relation to your portfolio as a scalp trader.
Yeah, great question.
This is something that's very important, and me and Rolf have actually personally discussed, and he was kind enough to share with me something that I didn't quite understand in maybe a couple months ago, was the nonlinear nature of a perpetual inverse swap contract. In that your margin, you put $1,000 into your account, and your account could be 100x. Well, your margin is 1% of your account is a unit of margin, right? And so as you're going into a losing trade, particularly on the long side, let's say, you're losing that margin, your maintenance margin, pretty quickly. You're losing the margin in your account, and your cross no lev position is getting reduced. So I like to enter with a little bit less leverage and I like to make sure that I am doing the mental math required to understand the nonlinear nature of the addition of leverage. I am losing money, which means that I can't consistently add, let's say 5x, 5x, 10x, 10x, 20x, 20x. I will be liquidated at that point. So you have to understand when you're adding leverage, maybe you start with some exposure. When you add some more leverage, you can reduce that exposure. But what you are doing is adding leverage to a nonlinear curve, which means your maintenance margin will be decreasing in value. Your margin, your available equity will be decreasing in value. And if you were to add 5x to a position that is, and you only have, half the money in your account because you've lost, the move has gone that much against you, that might actually be putting you in at 100x. So what you really need to do is manage that leverage by making sure that you've added at key moments. And it's the position sizing has a lot to do with that. Making sure that you address that nonlinear nature of the position, and really don't bury yourself a hole with leverage. And like I said, the other management that I do is I constantly move profits. I take my scalps usually pretty quickly. This is one instance where I'm not doing it quickly. This is probably the longest I've been in a trade for a little while at least, and we're only talking hours at this point. But so yeah, I like to
let me clarify, or I guess it sounds like you guys have had some conversations about this in the past, and maybe you were answering his question. But when that was asked, I was intrigued to, I guess, clarify or follow up here. And for that is definitely some advanced discussion about the nature of, it sounds like, cross leverage specifically, which I am definitely a big fan of cross leverage, and I have covered it in depth on my the Bitmex tutorial series. I believe that's 105, that goes into what cross leverage is and how that margin gets calculated. So check that out, anybody that is interested to learn more there. But what I'm curious about is, so tell me, relative to your bankroll size, how much is the most that you will deposit on an exchange, and what is the biggest position that you will take? So for example, if my bankroll is $10,000 and I deposit, say, a max of 2% on an exchange, because a rule of thumb, I don't want to lose more than 2% on any trade, and then I 30x that 2,000, that would be 60,000. So now my position is going to be 3 times the size of my actual bankroll, but I'm still not risking more than 2%. So could you just kind of walk us through those numbers?
In short time frames in scalping, I take a little more risk relative to my initial. So currently, I'm on my trading account, which let's take a look at that. I'm about 30x right now, and I stacked in heavily.
And how much of your overall trading roll is deposited for margin? Like just a percentage.
That's a very, very low number.
Right. This is what I want people to understand.
That was the question.
Very low number. I can't give you a direct percent.
Yeah, like 2.
I'm trying to think. It would probably be around 5%.
Okay, great. So that's what I want people to understand, is that you're using high leverage on a very small percentage of your bankroll.
Oh, and then even on this position of my tradable bankroll, I'm only using right now. I want to say that I have a little more wiggle room because I've been putting some aside, but let's just say if I only relate the amount of capital that I am trading to my insurance fund, I am only investing 33% of what I would normally trade. So I've even reduced that to a smaller fraction to get into a highly leveraged position and the capital that I want in the trade. But yes, I have reduced the capital so much because and I've made sure that my liquidation price is above a very critical area that I believe we can't break. But yeah, I have very low capital right now running this trade, and I have very low capital exposed to counterparty risk. In other words, I have very low capital on exchanges. And so pretty much my style does involve high risk, but it does involve moving profits, taking them. I call myself a humble corn farmer. I don't care if I take 0.01. I don't care if I take 0.05, because I don't care if I make 1 Bitcoin. The price can always move in the opposite direction irrationally. You can have every reason in the book to be bullish or bearish, a convergence of the most amazing and reliable indicators, and the price can move against you. And it has. I was right when we broke down from 10K. Someone else was wrong. I could have been the person that was wrong, and someone else could have been 100% right. So you always, like, that's one of the things I'm always thinking about and thinking, my signals or my analysis, my experience, and maybe even the luck, the trading gods, let's say, that fortunately, when you're in a trade, it's okay to take money, especially if you think price is going to move against you, because it always can. So as a scalper mentality, that's something that's always running in my mind. What is the unknown that can cause some sort of anomaly in this, and what is the known unknown, which I would consider a market buyer. Maybe another known unknown could be something like a Paul Tudor Jones effect on the market. Little things like that. And what are they doing? The S&P 500, little bit of a known unknown right now.
I have a good question from your. I don't know if it's Joe's chat or Saw's chat, but somebody. So this is a like potential black swan event thing.
Just to tie a bow on what Joe said before moving on. Sorry to cut you off there.
No, that's okay. But I'm going to hold the question. You do your thing, and then the question. Yeah, sure.
Just reiterate the idea of keeping a small percentage of your overall funds on a bankroll and then using leverage on that. And that will, as long as your stop loss is inside your liquidation price, like where Joe is talking about, he has a very keen understanding of where the liquidation is and where he would want to be stopped out. And as long as your stop loss is inside your liquidation price, then I see no reason why you can't use leverage. And the reason to use leverage is to minimize your risk, to minimize how much you have to keep on an exchange. That is the reason why I use leverage. And the only reason I would encourage anybody else to use it is to minimize your risk. And when Joe talks about getting wrecked, for him that may be 5% of his bankroll that gets put onto an exchange and he gets liquidated and he gets wrecked, which is maybe a little bit more than I would be comfortable losing, but it's still well within reason. And the last thing I wanted to say is that we are only 15 away from 1,000 live viewers. It would be really, really cool if we got to 1,000 for the first time when it was me, Joe, and Daisy on a stream. So anybody that can get us to 1,000, I would really appreciate it. Go ahead.
So maybe if you take your hoodie off, maybe we get
just if we get to 1,000, if we get to 1,000, if we get to 1,000, I'll do the rest of the show without my hoodie.
Thank you for interrupting, actually, because that is very important. As I understand also from Joe, he just puts a small amount of money on exchanges and then does the high leverage. So even if he puts his stop loss close to the liquidation price and there's hardly anything left in that little account, it's only a little percentage of his whole portfolio. So he's willing to take that risk, and that's very important. Never risk all your money on a trade.
The crucial and very important. But more importantly, if you lose your trading amount and you do not have an insurance fund that you've been building, and you haven't been consistently adding to your HODL stack, I firmly believe that if you fuck up that bad on a trade and you lose I believe the majority of your allocation should be in HODL. I also encourage people to have some DCA, and even if that includes selling some Bitcoin at a high, and that might even include a small percentage of HODL, to ensure that you can maybe buy $10 of Bitcoin a week for the next year or something like that, whatever it is. I'm not encouraging people to sell HODL. I'm just saying I do believe the DCA stack is very important, and I do believe that your trading stack, which is going to be your smallest amount of capital, is an amount of capital that if you're not making money on and you lose it, then you are done trading, and you go back to paper trading, or you focus on something else. But I have never added from my HODL to my trading position. Not ever going to do that. If I become a shit trader, then I'm a shit trader, and I'm walking away.
Tell us a little bit more about the insurance fund you're mentioning. I'm sure there's people wondering.
Mm-hmm. So my insurance fund is basically a way of saying, when I make money, I like to immediately move it and transfer it to a sub account. Get it the fuck off. The one thing that as an experienced trader, we've learned a lot of our lessons from our mistakes, me in particular. And one of those mistakes was maybe making a big trade and having all this Bitcoin in my account and being like, oh man, I could use more leverage, or I could use less leverage and I'll have more exposure and I'll have a further liquidation price or whatever, right? You start thinking in terms of the money you have realized, which I think is going to get you in trouble, because when you lose that money, you're not going to feel as bad. But if you remove that money and you put it in your insurance fund and you're only trading with your initial capital or less, then, and you keep making money and you keep moving it to in that insurance fund, ultimately one day, if you get wrecked, you're going to be able to re-enter the market. And that might be at a top, that might be at a bottom. Who knows when that'll be, right? But at least you will have a trade portfolio ready to enter the market. And even if that's only a small percentage of your insurance fund, but you make money, you put it to HODL, I would recommend maybe a 50-50 split. If you really want to be conservative, 15% goes to insurance fund, 85% goes to HODL. But yes, I do believe firmly in having an insurance fund, because this is a volatile market and it has a tendency to embarrass bulls and bears in one candle. It can do it, and it does it. And about every 5 months, we had the April 2nd move all the way up to 14.5K, 2018. We had the October 25th pump from 7K to 10.5, which was approximately 5 months later. April to October was approximately 5 months later. And 5 months after that, we had another 52% move. So we're talking about massive volatility over the course of a year. So as certain as these signals may be to me, there's going to be an event where I get wrecked.
And as long
5 to go, Saw. 5 to go before you put your hoodie up, and I have to put one on.
Nice.
Oh, I actually have one here in the room.
Only 2 left.
998, 995. Oh, it just bounced. And everyone hit the like.
This is like
the rest of the stream, right?
It's as stressful as watching the price go up and down.
You guys, there's a little button just under the video.
1,000, there it is.
Oh, okay, take it off.
Oh, it happened.
Take it.
Oh, man.
Gotta get
Let
a
me
picture
put my hoodie on.
Oh, it might have been too late. All right, there it is, everybody.
Ladies and gentlemen, the choir boy. The choir boy.
My favorite theory was that I was hiding a mullet, so I guess I got
oh shit! Oh fuck! The whole thing is falling apart here. Let me just switch off my video for a second. I'll be back with a hoodie.
All right.
Congrats.
Perfect. Yeah, I feel quite strange. I've grown quite comfortable in my hoodie. When I was at Ugly Old Goat's Bitcoin cruise, I got to meet the creator of Bitcoin and Friends, which is a great show on YouTube. I strongly recommend everybody go support it. Really a cool cartoon. And he asked me if my hoodie was kind of like Linus and his blanket. I was yeah, it kind of is, and I'm feeling like I don't have my blanket right now, but it's sure cool to get to have a milestone day on the podcast with the first time getting over 1,000 live viewers on Sawcruhteez Streamz, and doing it with Joe Saz and Daisy Coleman. So really couldn't been a better time for that to happen. So thank you guys very much. And yeah, I guess that was rather exciting. That was almost like watching Bitcoin break through 10K. But the cool thing was it only had to get there for a second, and then I could say that it happened.
Yeah. Well, it's still close, and to everyone, there's a like button below the video. Do us honest analysts a favor and hit that like button and support the work of honest people as opposed to some shitcoin shillers. But yep, Sock, I'm so proud of you, man, and I'm happy to be here.
Oh, and you too. Absolutely. I've seen that your channel has been blowing up a lot lately, and I, of course, have fun every week joining Joe on his channel for the poker night, where we'll often be joined by Tone Bays and Fibbo Swanee, and it's been a whole lot of fun getting to do that and take some money from you every now and again, and then it will be. It's been cool to see the analysis that you've been doing has been getting a lot more respect, or just a lot more attention, which I felt like that was long overdue. So I would definitely recommend everybody go over to Joe's channel and subscribe over there, and come join us for poker nights, and then listen to he provides great analysis in real time, and that's something that when markets are moving fast, I think the order book is the best tool to use, and that's when Joe will often go live and share what he's seeing and thinking, and how he's trading, and that can be I've always said that I think the best way to learn how to trade is to see somebody do it themselves in real time, and that's why I will be often sharing my trades and my positions in real time, sharing where exactly I'm buying, where exactly I would be getting stopped out, where exactly I'm looking to take some profit. So yeah, I guess with that being said, I do want to make sure to share how this has been a great compliment to MSR. So I'll take back the screen.
Yeah, this is one of the things I've been waiting for, baby.
And yeah, I'm just feeling so out of my comfort zone here without my hoodie.
Daisy has her hood
I
up.
got it up.
That is awesome.
Should I put my hair in?
No, I think it looks
yeah,
nice. I think
you look very nice. And I'm yes, this is excellent. So going ahead and just gonna quickly share an example of how I've been using MSR to trade on the small time frames, and confirming with the signals and what I'm seeing out of the order book. So let's just take a look at a recent 15-minute signal that was given from the trader mode of MSR, which anybody who has the current version would have been able to see this signal, because you have the ocean, and the area between the ocean and the beach is where the signals occur. So right here, we've got a signal from the MSR trader mode telling me that this is a buy. We see this horizontal support coming in right here. We see the beach with the area above the ocean and between the 200 EMA, and the 200 EMA is the line in the sand. So we fall below the line in the sand, but quickly get back above it and regain it. And right here, I was able to buy very, very near that bottom. Let's see, the low of that candle was 92.04. My order was 92.42, and then I was able to take a look. Let me see where the TRDR went. Okay, so let's just confirm this was May 15th, 15-minute chart when price fell to like 92.42. This was Bitmex I'm looking at, and I do use Joe's settings, and I do use BTC USDT on Binance. He says those are the best signals. He is the expert, and I have no reason to disagree. And I've actually been really intrigued by having some of the conversations about the thing, because I know he used to really like Coinbase and that sort of stuff. So definitely some really interesting
Coinbase is still pretty good. My settings on Coinbase are actually indicating the same thing: a very violent top and potential breakdown. Beautiful. As of last night, by the way. I could check again, but we'll move on.
Yeah, I'd be happy to see that. So right here we see as price was falling down to retest this area, we had a horizontal support that looks like maybe it was pulled right in the blink of an eye. Maybe it was filled, but we do get a signal. So we have this signal, this yellow signal that occurs, and that is providing big confirmation for what I'm seeing right here. And this happens very, very quick. I mean, it's less than a minute or two that you have to really be making decisions for how much leverage you're going to use and what position you're going to take. So that is a good example of how the signals can occur in line. When we test the beach and we get a buy signal, that's a really important thing for me, and that is a strong confirmation that this is actually going to hold as support and we're not actually going to get one of those bad signals. In any way that I can clear out some of the bad signals from MSR, it's just going to really help me to maximize the returns. So not only did we have this signal right there, we've got this spike in the volume by side delta, which shows, interestingly enough, 1,353 Bitcoins changed hands. Somebody sold, there was that many more Bitcoins sold than bought, and therefore somebody gobbled that up right in here. And seeing a big number of Bitcoins change hands, this is a panic sell. We had a big move down, and then you get a big number changing hands, and then you get a buy signal while you are getting the same thing from MSR. So that is a good example. Didn't turn out to be the best trade because I was hoping to get to my trim zone up in here, so I didn't get as much profit as I would have liked, but I was able to confirm this entry right here, and I still did get a nice move. When you're and I really don't even know how to define the difference between scalping or day trading. I don't think that this is scalping a 15-minute chart, but when you're trading a 15-minute chart and you're able to, I'm sure I would have been trailing, looking once we broke back below that 50 to get out, and that's a 3% move. I mean, from 92.50 up to 95.80, and absolutely I use leverage. I'll use 5 to 10x leverage. So if I enter a full position with 10x leverage, which I would be inclined to do when there's that much confirmation, and I'm able to capitalize on that, that's 30% of my roll. And again, I would only have a very small percentage of my roll actually on deposit, but just to show that a small move there that didn't even reach the target could still result in a very profitable trade. And that is one other thing I wanted to clarify is my favorite time frame. My favorite time frame for MSR has always been the 4-hour, and that's always been the since I developed it, it's been the foundation for how I trade. And the TRDR, it's for scalping, it's for day trading, it's for short-term stuff, so I don't think you want to use it on too high of a time frame, but I'm really loving what I've been seeing out of the 30-minute. It has been really providing some good signals. So here, let's take a look at a bad signal. If we were buying this and using Joe's textbook stop, we take a little stop where the price moves 150 bucks against us, and then we just get right back in. And we maybe get a couple, like right in here, we shouldn't have gotten stopped out at a loss, I would think, because it moved in our favor significantly. Right here, we get the bottom. Right here, we get a nice move. Right here was the perfect bottom. And what's interesting is it keeps you in, like this is the signal that that's the perfect signal as far as I'm concerned. It comes right at the bottom, and then if you are trailing, maybe using these higher lows, your stop, and you're able to keep in this position this whole time, here the sell signal comes at the perfect spot, and you're able to use that as a stop and reverse. You could exit longs and reverse into a short position, and these signals have just been really impressing me with how they have been consistently coming in at very good places. And when you get a bad signal, it just should cost you very little in relation to when you get a good signal, and that is what is most important to me. So right here, another good buy, and then right up here, a sell. So that tells you why, well, that doesn't necessarily tell you why Joe is short, but it is giving sell signals on various time frames, and the 30-minute has been the one that I have been really liking the most. So did want to make sure to cover that, and you will be seeing me analyze TRDR a lot more moving forward. As I mentioned last week, this is the first affiliate that I have added to my channel in a very long time. I do not affiliate for anything that I don't use myself or completely believe in, and therefore I am very picky about what I'm willing to promote and what I'm willing to affiliate for. And this is something that I was excited to really make it the main focus of what I'm promoting, because I'm going to be the two things that I use the most right now that I'm able to promote are MSR, basically Bitmex, and TRDR. So this is something that you will continue to see me looking at these charts and talking about these various signals and these various levels in the the order book top levels, as well as the volume by side. One other thing to tell people to potentially keep an eye on is the divergences that can happen in volume by side. So if you go to settings there, you will see that there is this divergence, and I have mine set to circles. And what that means is that basically right here, we have a divergence because this circle is on top of the candle. And what does that mean? It means the candle is red, but there was more bought than sold. And Joe had a really keen way to use this in terms of he looks for shooting star candles or dragonfly candles or hammer candles or hanging man type candles. So picture a big move down that has a dragonfly or a hammer that is a sign of a reversal, and that is a red candle, and there were more bought than sold during that candle, then that is much more important than just any other reversal candle. It is a strong confirmation that is a potential pivot point in the market. So many things that these tools can be used for, and I've only started to scratch the surface. I mean, there's probably how many more proprietary indicators are available that I just haven't even had the time to look into.
There's oh man, man, we might need to talk about that. There's different ways to view a ton of this. You can look at without the overlays. You can look at just the order book depth, cumulative or non-cumulative distances from price. In a separate indicator itself, and you can only look at the bid to ask ratio, and you can look at the delta spread, and you can kind of see these crossovers, almost similar to how a DMI would work. But there's tons of things that you can do, and obviously I focused on the signals, the yellow signals. But yeah, I've spent a lot of time with a lot of indicators. We also even have long to short ratio indicator now available on a couple exchanges, an actual data stream that we receive. So, I don't know if you need to take it with a grain of salt or not, but it's the data that we are provided. So we do have long to short ratios on a couple perpetual exchanges. Like, I don't know if we have it on Bitmex, but maybe Finance Futures and a couple others. So, we're growing, and there's a ton more coming. And one of the things that also excites me, which may excite you a lot, is that we're actually going to see what it looks like, hopefully in a number of months, maybe not, more than a year from now, to see if we can get the same information running in from the stock market.
Wow, that would be extremely interesting. There is a tremendous opportunity for volume analysis in traditional markets. A lot of them don't even provide the traditional volume bars at all. So that is really interesting, and definitely keep me posted on that. And I know it's getting late in the Netherlands, and I promised I wouldn't keep Daisy up too late. So tell us how are you doing, and you got any good questions?
I'm still good.
All right, any more questions for us?
Well, more general questions, not specifically about TRDR, but this was the Black Swan question I was going to ask earlier, but then you guys don't. So, from Rimas, the question's from Rimas. What are the most probable outcomes for Bitcoin if we find out that the Tether treasury replicates its role just as bad as its native brother Fed and claims for insolvency? So the Black Swan event of Tether being exposed and insolvency and not being worth anything, and that event. So what do you think is going to happen to Bitcoin if that happens?
I'll be excited to hear Joe's thoughts on this.
Because I knew you were going to say that.
This is something that used to literally keep me up at night. I mean, I literally was terrified.
Let's hear it, Joe.
Tether collapsing. Yeah. Well, I'll give my thoughts first and then let Joe respond. Okay. Because I do think that it's something that could be really bullish for Bitcoin if Tether goes down and they're insolvent because they have no money to back the tethers. Well, there's going to be a moment in time where there are people who have Tether on exchange, and then they go buy Bitcoin. So you would have something where a huge divergence in the price between BTC USD and BTC USDT, and that could cause some real mayhem in the market, which at first could cause a big spike in the USDT pair, which we did see that in 2018 when the value of Tether fell to 85 cents and the USDT pairs skyrocketed in the blink of an eye. So there's a number of things that could cause that to happen. And when it did fall to 85 cents, I thought I did enter a short on Tether. You can short USDT against USD, and it is a very low risk trade as far as I'm concerned.
Yeah.
So that's something that if you're terrified of that happening, you can potentially hedge yourself by depositing some Bitcoin on Kraken and using that to leverage short USDT when it's above $1. Because I think that there's a lot of things that could happen, but I really don't know what would end up happening. What are your thoughts?
Yeah, well, I'm going to come out and say I'm a hardcore Tether footer. I hate it with a passion. I think it's an enemy where people are so focused on these technical enemies of Bitcoin, state-sponsored mining attacks, 51% attacks, Chinese mining pools, etc., XYZ. Everyone's like thinking about all these data, or let's say technical attacks on Bitcoin, whereas I believe Tether is a financial attack on Bitcoin in that it is a Federal Reserve type entity, which Bitcoin is designed to essentially overthrow in revolutionary fashion. And so we basically allowed what's it called, an unregulated and unaudited money printing machine to enter the space. And I believe they've been doing it for a lot of reasons. Now, what I'm going to bring up as part of my proof here on what I believe would be the outcome in the event of a Tether implosion of some sort is October 25th. We pumped from 7.3-ish all the way up to 10,600 in a flash in a matter of 15 or so hours. And interestingly enough, on that same day, the crypto capital CEO, who is tied to iFinex, the parent company of both Tether and Bitfinex, the crypto capital CEO gets arrested, and I believe there was a massive demand to exit Tether that day. And that is why I am very bullish short term on a Tether exodus. I believe that Tether is probably going to be around at least 2 more years. And a big part of me believes Tether will not only be responsible for the next violent bull market, even toward the end maybe, but also for the bear market as well, when Tether does collapse and people realize that all the money they thought they had is worthless. So I do think that there will be an initial sharp increase in price, and even potentially, I mean, we saw it move a $7,000 Bitcoin all the way to $10,600. So I think that this could be even more wild in the event that the New York Attorney General throws something harder on the table. More people get arrested, something happens. So I'm short-term bullish on Tether exodus. Of course, it just economically makes sense. But I do also believe that when that dust settles, there was a full retrace. And if you look at the daily on October 25th, what you'll see is there actually was a massive pump and a complete full retrace in the coming weeks, which I believe would be the case. And in a bull market, and particularly a violent bull market, which Bitcoin will experience, hopefully not too long from now, maybe this year could be the beginning of it, and next year could be the end of it, or years from now could be the end of it. But I believe that Tether will be a big part of why we spike, and I do believe Tether will be a big reason why we also retrace, and that FOMO after a massive bull run could potentially trigger a lot more fire than we would, than a long-term hodler would want.
Excellent. Looks like we're going to have trouble viewing a chart because this thing is so wrecked out of manipulation, and it is a good thing to point out that shorting USDT on Kraken has the risk of the extreme manipulation that happens there. So let's see if there's another chart
There was a day on Kraken, by the way, data feed inaccuracy or not. There was the day where a tether was sold for $1,000.
Yep, I remember that. Yeah, absolutely.
A single tether.
Joe, wasn't it like yesterday or 2 days ago that some Bitcoin future hit 17K
Yep.
in like half a minute?
I actually, the funny thing is, me and Sawcruhteez talked about it, and I forgot that I had actually taken a screenshot, and I remembered at that point the volume that was injected into that candle. I have this.
It's pretty insane.
It's posted on my Twitter. You can see the wick all the way to 17K, and you can see the volume divergence on volume delta, right? Volume by side trades of any size. So you actually physically see the amount of volume that went into that pump. And I remember looking back at it, it was around 2,000.2 Bitcoin, and there was around 70% slippage, obviously, from price to around 17K. It was a 70% slippage. I do believe that this was not, and I believe that this happened. And if you look back at the charts, they are no longer there. I'm now more inclined to think, after further discussion, that chances are they pulled the data, because I saw the volume that went into the candle. I took a picture of it, and I said, this is why I don't trust this motherfucking CZ and his shit fucking exchange Binance, but I will use his, BTC USDT, because it does have the most volume as far as a traded pair is concerned in Bitcoin. Therefore, I believe some of the most accurate signals. But I just can't believe we saw a flash to 17K. Maybe they refunded people. I don't know. It didn't become big Twitter explosion. But I do have pictures, and I was even live, not when it happened, but live reviewing the volume delta, physically seeing the amount of Bitcoin bought, and it's all there. So something weird is going on in that instance.
Definitely. Yeah.
Here's the picture right here, where there is clearly a
is that my screenshot?
wick on top, all the way up to 17,000.
Yeah.
And you can see how much Bitcoin changed hands when you use the volume by side. So yeah, I thought that it was just a data error until Joe convinced me otherwise. And I do happen to have, let's see, a rather different view. Let's see, I don't know why this won't let me.
And what date was that, real quick, Sock? Because I want to see if I can tell you the exact volume delta.
It looks like the 15th.
Okay, I'm gonna just take a quick scroll through the 15th and.
Okay. And while I do that, I will share my thoughts on Tether. Is that I used to be the same as you, viewing it, and I'm not going to touch on whether I think it's an enemy or not, but I used to think that it had to go down. It was only inevitable, and it was only a matter of time. And now I actually do think that there is a lot of use cases. Like probably the altcoin with the most use case is Tether, as far as I'm concerned. And I say that because I use it. I've only ever used two cryptocurrencies in my life, Bitcoin and Tether. And Tether is a great tool for arbitrage, and it is going to lose that value as the markets get more efficient. But the thing is that the part of the thing that's been making the markets more efficient is Tether, making it easier for people to arb out these differences in the price in different exchanges. You cannot, it makes it a lot easier to send Tether to Kraken and then trade it for USD and buy Bitcoin, or just buy Bitcoin directly with the USDT. That's generally going to be the only way you can ARB something out if there is a you can't get, if you don't have money on the exchange already. Basically, if you need to wait for a wire to get to an exchange, you're going to be competing against somebody who's going to beat you. So therefore, there is a use case for Tether that will go away as the market becomes more efficient, but maybe perhaps it is helping to make the market more efficient. The other way I would use Tether, potentially, I haven't in the past, but it would intrigue me, is that a problem with trading on Bitmex in bear markets is they only allow to use Bitcoin as margin. You can't use anything else. So if you're in a bear market and you're wanting to short to bet with the trend, well, you're needing to hold the underlying asset, which means that if you short your entire account value and the price goes down, you just break even in terms of US dollars. So that's a problem. And when I heard about Bybit offering, I'm not sure if they do yet or if they're going to very soon, USDT for margin to trade Bitcoin, that really was the first time I thought that I might actually use Bybit, or I could actually see a value proposition that they can offer that Bitmex does not. And the key there is that it's also anonymous. So I can't get onto an anonymous exchange and have US dollars as like my bank account linked to it. So they would either need to have some sort of spot exchange, or they could have a USDT wallet, and that would allow you to trade on margin without holding something that you're wanting to short. So I use Tether, and therefore I believe that there is a use case. And I have gone as far as to say that if the economy collapses, then I would rather own USDT than electronic US dollar. I'd rather own Tether on Kraken than I would USD as numbers on a screen in Wells Fargo, for example. I believe that Tether has more USD backing than most banks. I also believe that they're more fiscally responsible because they are not qualified for or relying on a bailout from the Federal Reserve. So a topic we could talk about all day, and I don't really want to, but I did want to.
And no negative interest.
No negative interest. Yeah, there we go. This is something else. Absolutely right. So thank you for that good question, and always fun to give that type of stuff some thought. Can I put my hood back on?
Nope. Only if I could put mine off. Should we switch?
No.
Okay, three. You want to switch?
We have to
2,
all have them on. We have to all have them on for the end for the sign off. So
I think we're gonna
And it's probably about time to sign it off. We have been going on for a while here, and I think we have covered.
I have one little question, guys. Sorry,
Please.
Somebody asked in live chat. You guys having 1K views, is this bullish for Bitcoin?
100%, no doubt about it. It's very bullish, and not nearly as bullish as Tone Vase's show that he did on the halving. I mean, that was top 10 trending on all of YouTube for a little bit. I mean, talk about this thing going from a small niche audience to actually starting to reach some wider eyes. And this is the thing. What really causes people to buy into Bitcoin is when it doesn't go to zero when they were convinced that it would. So in 2017, everybody heard about Bitcoin, and not many people bought it. I told every single person I knew to buy, and maybe 2 did. So maybe there was like a 5% close rate for me to sell Bitcoin, but everybody heard about it. Whether it was from you or me or the news, everybody heard about it. And if they didn't buy, it was because they were convinced it was a Ponzi scheme that was going to zero. And when it doesn't, every time it crashes and doesn't go to zero, it gets so much more confidence from the market. And I just speak from experience. When I first found out about Bitcoin, again, it was to use it. It was in 2013 to basically be able to deposit on a poker onto a poker site and play poker. And I watched as the price went up, and I remember telling my friends so adamantly what a bubble this thing was and how this obviously had to go to zero. And obviously we learned nothing from the tulip bubble. And then it crashed and it fell 90-95%, and then it didn't go to zero. And then a year or 2 later I heard about it again, and then I really start to look into it and start to understand and start to learn what was going on. And then I started to buy. So it is just tremendously bullish that now people are starting to hear about Bitcoin again after the 2 years went by where they were convinced over those last 2 years Bitcoin was going to zero. Everybody that I know that I told to buy Bitcoin and that knows what I do for a living, they all thought that for sure I'd be in the poorhouse by now. Like, they can't understand how I'm not in the poorhouse right now. And now they're getting really interested. Everybody that didn't sell last time, I'm going to sell 90% of them this time. And already some of them have called me and come over to my house with cold storage wallets and asked me how to help them set it up. So it's really bullish what we've been seeing. And to ramble on a little bit more, J.K. Rowling was tweeting about Bitcoin yesterday, and clearly she didn't understand it, but that didn't matter. She was sending out Bitcoin to her millions of followers, and Elon Musk is chiming in like, hey, look at all the money that just got printed. I mean, it is just as bullish as could be.
Yeah, definitely. Oh, Elon Musk only owns 0.25 Bitcoin, he said. right?
Yeah.
Well, that'll be enough.
So yeah, so maybe we are all going to be richer than Elon Musk if we just hold on to our Bitcoin.
Maybe we'll be the first ones making the moon.
No, but I agree. So yeah, I agree. Yeah.
Excellent. Well, thank you for that question. That was the perfect question. And I've just been tremendously excited to talk about all of this as much as I can. I was just recently on a podcast that I meant to share. I'll be tweeting it out. It was with Wes Carlson, and I can't remember the name of his channel right now, but we got into some good stuff. And yeah, now's the time to be talking about it, just getting people thinking about it. Don't necessarily be telling people to buy, but just get them talking about it, thinking about it. Check back in with the people who you talked to in 2017 to see how they're feeling about it now. And the more people that I talk to, the more bullish I really get on a big wave of new adoption.
Great.
And that's a perfect time to...
Yeah.
Let me just throw one more thing one more thing to agree with you, Stock.
He's so happy. Look at his face. He's so happy to put it back on.
Yeah, it's like I was naked. I was
Cannot deny that.
Linus without his blanket. Go ahead, Joe, please.
One of the things I think about is when people come into Bitcoin, it's almost like their first interest is price. Most people about Bitcoin, their concern is price, volatility, price, whatever, right? Making money. And so the more people we have, kind of talking about this and going to analysts and seeing analyst viewership go up is a strong sign of interest, at the very least, to me. So, I definitely think that that's a strong sign itself, that there is a lot of demand for understanding the value of Bitcoin. Is it a good time to buy? Is it not a good time to buy, et cetera? So that's a big indicator to me that there's certainly a growing interest. And that's a big part of why the discretion in me is saying be very, very careful right now. This is not one of those times where I feel like overexposing myself with a lot of capital, because anything can happen. It's Bitcoin, baby.
It's Bitcoin, baby. Any last words, Daisy?
No, it's Bitcoin, baby. That's just perfect last words.
Excellent. Well, thank you everybody for tuning in and sticking around for such a long show. What's crazy was getting to 1,000 viewers like after streaming for an hour and a half that people are actually still around. That's when I expected to drop to the floor. So you guys are the best. Thank you very much for tuning in and for asking questions, for smashing the thumbs up and clicking subscribe. Right below are going to be some links at the top, and all the links to Joe's social media, YouTube, Twitter, and then also got a links right to the tutorial for TRDR and my affiliate link to TRDR as well. So yeah, thank you guys again for joining us this week. Daisy and I will continue to make this a regular thing, and I have been really enjoying having some other guests on as well, so that will be something that we continue. So with all that being said,
I'm super happy to have our friend Joe on. Joe, thank you so much.
I'm so happy to be back with you too.
Yeah,
absolutely.
That's awesome.
Bitcoin, baby.
Yeah, it's Bitcoin, baby. That's the good end.